now free to go ahead. At the outset, let me thank the Central Council members present here and the member of the BFSI board and my co-panelists and speakers. Thank you very much indeed for being present here and giving me this opportunity to share with you my thoughts on reflective overview of banking and insurance business in India, the way forward. I'll be taking about 35 to 40 minutes. I'll not talk on the slides. I'll just touch upon the points in the slides so that you can reflect on the points and then think through. This, of course, will be available in the YouTube and in my personal YouTube channel, so you can definitely subsequently look at it once again. You can connect with me for any questions that you will have immediately after the presentations are over. Okay. Okay. Understood. So I'll be available to you 365 days, about 13-14 hours through LinkedIn. Any questions, anything you have, you can definitely connect with me. I have a personal YouTube channel. I think this I'll be loading in my personal YouTube channel also, so you can subsequently see it. I will speak something from one of my research papers, which I did with professor of National Institute of Bank Management, provided we have time. We have done a research of 42 banks in the world of all the 5 continents. Let me see whether I can speak. The last one is the chapter. It was published in the Indian Banking and Finance Report 2021. So I'll now go ahead and talk about. I can share with you a lot of graphics, but most of those graphics are not created by me. So I owe the responsibility to acknowledge the contributors to this presentation. I have just 4 segments of my presentation. First, I will talk about the risk and de-risking of banking and insurance business. Then I'll go for cost optimization and mitigation from the perspective of digital transformation. Next, I will touch upon NextGen neo-banking. And finally, I'll come to the emerging strategies of top global banks, provided I have time. So the axiomatic statement is this: banking is necessary, banks are not. This was in 1994, or 31 years before this gentleman spoke, Mr. Bill Gates. And we are seeing the changes already. Using a logical corollary to this statement, we can bring it to insurance business and say insurance coverages against risks are necessary, but insurance offices and brokers are not. Okay. So COVID-19 pandemic told us all these things, that yes, we need not go to the bank. So finally, trust, services and relationships are necessary. Physical meetings and branches are not. So I repeat, trust, services and relationship, because banking is a business of trust and relationship. So these are necessary. Physical meetings are not. You may be knowing that Indian banking business is predominantly dependent on lending. So in 2014, we published a paper in Indian Bankers, IBS magazine, and we studied 70 banks from around the world, and we found that the world average of banks' revenue is 23% is other income and 77% comes from interest. That's the world's average. And the Asia other than India average is 24% other income, out of which 10% is commission from foreign exchange and 76% interest. US, 47% other income and 53% interest. So US bankers 47% they are dependent on fee-based banking service earnings and not interest. This study is as old as 11 years, and I'm sure a lot of researchers sitting here in this room, a lot of more research is necessary in the context of India and Indian banks, including the cooperative sector, ma'am. My simple question here is why Indian banks are so heavily dependent on 300 years old business, which is essentially interest earning and not fee-based banking. That's my simple question. And I would personally be happy and available with any researcher who would like to do research on this particular topic and see what change has occurred. And if I change this data between private sector banks and public sector banks, just 2% more. Fee-based earning of public sector banks in those years were 2% less. That means about 15 to 16% was fee-based earning of private sector banks in India, and rest were interest-based earning. That's the research-based paper when I was in NMIMS as a senior professor, along with my two students who did this research. My first question goes to RBI and the regulator. Why RBI is not allowing Indian banks to trade on commodities? I remember when I participated in the mergers and acquisition process of Shell's refinery in Manchester, Stanlow Refinery, we started buying crude oil from Barclays Bank. They used to sell crude to us and they used to sell our refined oils. So banks does commodity business. Why not Indian bank will do also? Why they have to predominantly depend on lending earnings? This is the first question. The second question is why Indian banking has not so far adopted strategic cost management a part of their way of living life. And the same question goes to Indian insurance business. Do we have a cost center accounting in Indian banking business? Can I say that this is my car loan business, these are the total cost of the car loan business across the board of the particular bank, and these are my total earning, and this is my car loan business profit, not net interest margin. That doesn't make any sense to a finance man like us. Okay, this question, depending on that particular basic question, I will be giving you certain issues and challenges and risks of Indian banking business. The first is loan deposit growth. The growth should not run ahead of deposit growth. And I'm sure deposit growth, you are seeing that there is a little reducing trend because of a lot of money is going to the primary capital market. And thanks to Indian bond market, which we, the corporate finance guys, waited for decades and decades and decades, Indian corporate bond market is now developing. So banks can expect that Indian population may remain around 140 crore, but in terms of number of depositors may not increase, or in terms of magnitude it may not increase, because of one simple reason, that people have understood what is capital market and bond market. The next point is cyber security. Topendra is sitting here. He will be dealing on this subject quite a lot. Next is digital frauds and mule banks. Again, Topendra, he will be dealing on this. Mule banks have become a big issue, and financial and operational reputational risks. You see, bank is a business of trust. And if trust is gone, then what is remaining in the banking business? Because cash is your raw material. Raw material doesn't make a business. Raw material processed with trust and security gives you the business. Banks are giving a lot of third-party contracts. But third-party contracts without oversight and governance is of no use. You have seen recently, even the Federal Reserve has been hacked. Their websites have been hacked because a third-party service provider left some clues for the Chinese hackers to get into their systems. I'm not making a story, it's a reported news. Uncle Sam's treasury has been hacked. Okay, next point is retail credit. If you are giving more retail credit, more vigilance required. Fair conduct. Some people say that fair conduct is necessary because RBI is there. But believe me, fair conduct is not necessary because RBI is there. Fair conduct is necessary for your brand image building. Very simple point. Today, without brand image, you are not going to get your customers. Sustainability and transition finance, you have just now heard Professor Shivarama Prasad, but he didn't talk about blue finance. Let me tell you, in addition to green finance, blue finance is also a big story now. And finally, private credit markets. I'm told that Indian banking system is also co-participated in the private lending business, which is coming through the cyber system. Perhaps that is also going to be a big issue. These are not my words. These are words of the Reserve Bank of India, immediate past governor, Shaktikanta Das. I have taken it out from his BFSI Financial Express Summit in July 19, 2024. I have read his full speech, and these are some of the points which I have picked up the bullets and explained these narratives in my own language. So he said, embracing technology and innovation while remaining focused on governance and risk management can ensure sustained capacity and resilience of the financial sector. So capacity will not only be required, resilience also will be required in a big way. My simple point is, Indian corporate bond market is gradually advancing to give banks a run for money. Where will you be able to sustain your lending business, particularly in urban-centric branches, where your maximum deposit mobilization takes place, if you guys lose to primary capital market and you guys lose to corporate bond market? As you know, when we calculate the capital asset pricing model, we take government bond rate as the free rate, risk-free rate. But in USA, corporate bond market is taken as the risk-free rate. Because in India, the corporate bond market has not expanded, we take government bond rate, that is GSEC bond rate, right? I'm sure, which when I used to be a CFO, I used to suffer that there is no corporate bond market. But if 10 years down the line, corporate bond market becomes a reality, and that too driven by blockchain, which establishes trust and transparency, what will happen to the money which will go to fixed deposits? Where from you will sustain your business? So Reserve Bank of India must immediately start thinking banks to be given the authority to do commodity pricing, commodity business. That's my point here. Here is a very जुम्मा 2025 की वर्ल्ड रिस्क रिपोर्ट, very जुम्मा. Look at the interesting data here. The World Risk Report, the top of the list by 900 experts of the world, they have said that state-based armed conflict, which have just now seen in Middle East, Ukraine, and also Iran, Iraq, etc., 23% of the risk will come from there. Extreme weather is 14%. Geo-economic confrontation, which Uncle Sam is now working on, that if you have to bring goods to my country, you have to pay 25% import duty. Who is doing it? The gurus who taught us globalization, those gurus are telling us protect your border, right? Uncle Sam is, Mr. Donald Trump is telling us this. If that be so, and Tapendra, this is information for you, 7% of 900 people said that misinformation and disinformation is going to be 7% risk for bankers. Have you ever thought that misinformation and disinformation will be your risk? You might have not thought. I don't know whether Saraswat Bank has in its agenda something to do with risk management on misinformation and disinformation. And rest of the 22% is on social causes. This is an area which is an emerging risk area for bankers. Social polarization, economic downturn, critical change to art system, lack of economic opportunity, erosion of human rights and inequality. You say, Dr. Basu, you are an absolute stupid guy sitting in the city of Bombay. You are talking about banking risk. This is the place where the bankers are here in India. Even the Reserve Bank of India is here. But what can I do? This is the global report where people converge, that is Davos, where people discuss all these things. I'm talking about those people's data which will be referred in this year's Davos conference. My purpose is not to give you a gloomy picture. I'm trying to narrate the narratives of the world. There are a couple of things are coming up. First is the technological risks, adverse impacts of AI applications. If you have seen day before yesterday's Palki Sharma's Vantage, it says that 1 bottle of water, 1 liter of water is necessary for ChatGPT to generate a prompt for running an email. And it is saying that water is not available in the city of Los Angeles and San Francisco area because ChatGPT guys have used so much of water for cooling their servers and systems that the water is not available in the hydrant of the city, which was to be used for firefighting. That's the kind of situation coming up in the context of technology risks. But do you say that I'm being a digital transformation guy for last 17 years, 16, 17 years, I'm working in this area. And I'm only talking about ChatGPT should be stopped. No, I'm not talking about that. I'm talking about balancing the requirements and be responsible bankers and insurers. Next is while the short-term focus remains on cybersecurity, AI-related risks are going to be there because there is a hallucinating AI, there is a synthetic data, and there is a data which can mock you out. Huge problem. And finally, generative AI is causing this 7% data problem, information problem. This is what the latest report, 100 worldwide by experts. Okay. Now let's go to the next one. Report of Deloitte 2024. What is the outlook of the world? Look at the top of the pyramid is return. Look at their return. Look at their line. Enhance brand reputation. I was talking about reputation enhancement. Ultimately, your interest earning business and your premium earning business will depend upon how much we respect your organization, not how much efficiently you give us the claim. Upgrade insurance value proposition. Upgrade the insurance value proposition by placing standard risk transfer policy at the center of much broader, more holistic risk mitigation programs. Next is access and inclusion for underrepresented and unprotected. OECD is shouting from rooftop, OECD, shouting from rooftop. And if you have studied the report created by Nandan Nilekani and Augustine Carsten is a Mexican economist, they have said the insurance business is totally divided into developed and underdeveloped countries. I have that report with me. I have the statistics with me. I presented in that Finternet webinar where it here said that insurance business is completely underserving the southern part of the equatorial. So insurance business has to go for unrepresented organizations and unrepresented people. Finally, build the trust and confidence of customers by transparency. Can you put your hands here and say that Indian insurance business and banking business is completely transparent? Do you disclose your NIM in your quarterly result? No. I'm talking about net interest margin. Do you say EBITDA, you say turnover, you say profit, but do you say what is your NIM? Do you say how much you have saved by introducing technology and thereby X percentage of the savings due to technology has been shared by reducing your interest rate? No, because interest rate is a dynamics of the market. But the demand, the study which we did with the NIBM professor, demand is that you should be passing on a portion of your savings due to technology introduction to your customers. And that should be an additional passing in addition to the market dynamics, which is determining your net interest margin. Very simple point. So, having said all this, let me now come back to you and tell you what I think about the digital transformation of banking and insurance business. All of you believe this, right? The blue statement, right? You believe which technology of this world can establish this? Only blockchain. No other technology of this world can establish this, and banking squarely rotates on this. So you have to bridge the gap between truth and trust of common people. Nirav Modi, when took away a lot of money, the trust got broken because your computing system and operational process, that is SOP of banks, are not integrated. Thus how the MIS did not declare how much money has been swindled away by letter of comfort, because it didn't come out your banking system, because letter of comfort was not captured in your MIS. That is, I am told, the root cause of not controlling that. If that be so, what is then digital transformation? What is digital transformation? Digital transformation, ma'am, and the girls present here, please don't mind. Digital transformation is not a lipstick project. It's not to decorate banking and insurance business, and for that matter, any corporate of the world. Digital transformation is for digitalization of your organization. And it's not a one-time project also. It's a project which is a journey and not a destination. What is happening in this world, particularly in this part of the world, Asian banking, digital transformation is not the digital transformation of business models and revenue models. Digital transformation is standing stopped at only digitalization of your business. Because of robotic process automation of your lending system, I'm sorry, I'm blaming the banks. Please don't mind. I recently did a diagnostic study of a very large NBFC of India as a consultant, pre-diagnostic study, and we simply told them what you are having comfort in terms of digitalization of business will give you the maximum discomfort as you progress. And that company has lost 20 crore internal fraud by an account head in trial balance, which was not reconciled appropriately, but by human being. And it's a newspaper story. I don't want to name that organization. So digital transformation will be the truest, in truest sense of it, when you generate a new revenue model and a new business model. I'll give you a 1 minute explanation of that. Suppose I'm buying an Apple phone, which is 1.25 lakhs from Amazon.com at night 1 o'clock. And when I check out for payment, bank gives me a prompt, would you like to avail of loan? I say yes. I am transferred to bank A or bank B. The bank A bank B has already done robotic process automation of their lending system, because today KYC is instant, and you have all your other cards and your income tax return, etc. You upload, other card will be automatically validated from the other card system. Your PAN and your ITR will be validated from the system. The robotic process automation has already embedded the SOP of the banks. Lending process has been automated. Within 3 to 4 minutes, even if you are not a state account holder of that bank, they will sanction the loan. Payment will be issued to Amazon.com or Flipkart.com. You will be getting your phone and the loan is sanctioned. If that is done, it is called digital transformation of lending business, where you have created a new business model and a new revenue model by that process. In such time, the robotic process automation of your lending business is only digitalization and not digital transformation. I repeat, not digital transformation. Digital transformation takes place only when you have created a new business model. And this is equally applicable to insurance business. Okay. So I give you one of the major thinker in the digital world, David Baer. He said that digital banking has not actually arrived yet. Rather, what is happening is more simply digitalized banking. We are seeing 300-year-old products be manifested and distributed via websites. I don't know, Tupendra, you are an ex-banker and both MNCs and Indian banks you have served. You may be perhaps killing me after I go out of this room. Right? Perhaps, and madam definitely is cursing me by now. But because of consumer needs, the digitalization will ultimately lead to innovative banking products. So in 2018, the Bank of Australia has introduced blockchain-based bond marketing end to end, right from the prospectus, that is the offer document, till the money last installment of the loan coming in, completely blockchain. In India, even tokenization have not been. I have recently submitted a paper for an US-based publication on tokenization for building capital assets in India. Hopefully, if that paper is accepted for publication, you will see that paper of mine. Of course, a short version has already been published in the Institute Journal. Tokenization for increasing capital asset building for villagers in India. That's the paper of mine. If that be so, what is happening in India? CBDC, central bank digital currency, is now still not in blockchain. I'm told, am I right? I'm told some of these skirmishes are being addressed. Although the wholesale has been sorted out, almost the retail has not been. I have a wallet, I have a e-rupee wallet in my phone, but I'm still not done transaction. One more thing is coming up. The UPI, that is the neo-banking system, has already almost taken over your banking operations, at least retail payment part of the banking operation. If that be so, the importance of CBDC perhaps has reduced a bit. It is my personal opinion, I'm not sure. Please don't kill me for that. So, what is the global banking phenomena of IBM? This is an insight by IBM experts in the context of AI and generative AI, because that is what is the fad of the time, right? Even your son may be writing something, or your daughter may be writing something with ChatGPT and Gemini, etc., right? But be careful that how much water is being consumed for that. 78% or almost 8 in 10 institutions are tactically implementing generative AI for at least one use case. That means globally, it's not Indian statistics, 78% are tactically implementing. 60% of generative AI decision makers see higher value in risk control. What is happening here? Let us stop and reflect for a moment. If you use generative AI, in fact, in 20th February, I'm going to Bangalore for, for a large group, real estate group. I'll be talking to them about strategic business management and critical thinking. There, this statistics perhaps would be very useful. 60% of generative AI decision makers see higher risks in value control because of hallucinating AI, because of synthetic data, and because of ethical hacking, and because of relevance of data and information, which if you do not apply your generative AI in the domain of information which is reliable, then you will end up as that US lawyer who created a case for supporting his pleading in US Supreme Court, and he lost the case because after the Supreme Court heard that, it said there is no case for such case. Then the judge asked him how you have got such a case. He said, I got it from generative AI. He said, generative AI created that case and you go to jail, please. So everybody was released. The lawyer went to jail. And it says it was covered by Forbes and it was covered by BBC. I'm telling you the real life story. Okay. So please be careful, decision makers sitting here, that be careful about generative AI. But generative AI can be the best. That's why Indian banking system and SEBI is jointly creating a database of all listed companies, which will be authentic data. If you apply your generative AI in that domain of data, perhaps that will be perhaps a correct decision making will be doing. So these statistics again is saying 60% of banking CEOs indicate new vulnerabilities in cybersecurity, legal uncertainty related to operation, difficulties in controlling outcomes and accuracy. Sorry, I'll be finishing another 5 minutes. I'm done. So trust and transparency can come to you only in blockchain, which will be operated by smart contract, not by the whims and fancy of anybody. And in that, you can have a public network, you can have a private network or a hybrid network. Your forex transactions, your loan syndication, or confirmation of beneficiary banks. As you know, 15 Indian banks have formed a company for generating a blockchain for trading for trade finance. Okay, and of course you can do blockchain within your organization for management of your data, management of your access control, and so on. And look at this. This is the statistics of Statista, the most responsible statisticians of the world. They have said 2018 only 0.28 billion was the spending in blockchain. By 2026, 22.46 billion will be the market for blockchain in banking and financial sector. Only for blockchain. If you infuse AI into that, it can do wonder because this data is yours. So coming to that same AI story, 32% of people are applying AI for risk and compliance management, which improve your brand image also. Client engagement 26% and IT development 24%, that means programming and other support areas balance. Now in this context, insurance business is doing all these things. I don't want to explain this. The only thing is that crop insurance, which has become a very big thing in the context of insurance business, drones are serving them very well. Drones, for not only harvesting, drones are being used in terms of sprinkling of insecticides and pesticides, but drones are being used for surveillance and crop insurance. Predictive analytics is being done for premium and provisioning when CMS can come in a big way. And edge computing, EDGE, edge computing can be introduced for the entire system to be brought into one. I'm sure Tapendra will be speaking about it. Next gen banking. And another 2-3 minutes, I'll stop. Let's tell you this. I'll just explain to you only one point here. In 2010, I was invited to speak as a non-banker in the BankCon, BankCon, the National Conference of Bankers. 2010, when I was the SR Group Global Group Controller. There I talked about two banks, Jibun Bank of Japan and Garanti Bank of Turkey. They don't have any branch. They operate, 2010, they operated without branch. And banks do not allow right to make mistakes. Without right to make mistakes in environment, you can't do innovation with digital technology. That's what I talked there. So neo banking is what? Very simple. I presented this in an international conference. New banking is born in investors' mind in the digital age. Digital banks, which is today, say HDFC or SBI, are inherited legacies and traditions. No physical branch cannot wish away physical branch. Challenges the legacy and develop entirely new innovative system. Transfer traditional services to digital channels. Front to back end seamless innovation approach. Mind you, front to back end. That means they design everything, keeping the customer at the front and go this to for designing the solution. And what is happening here? Back to front conversion approach. That means what I was doing 300 years before, I am converting this into digital technology. That's what it is. And finally, they want to do minimization of cost and maximization of value creation by fintech. They can't avoid, traditional banks can avoid because they can't think of without a branch. And finally, these guys are not full stack bankers. India doesn't have any single neo banker without which has full stack license. But in the world, there are a lot of neo bankers who are having full stack license. This is the structure. Neo bankers operate between customer and the bankers in the country India today. This is the customer, this is the banker, and in between lies neo banker. You may be knowing ICICI Bank has introduced in their software system as an MSME, you can come and process your order to cash or procure to pay systems. You can just put your SOPs there and your guiding rules are there. The bank will process everything and integrate with their payment system and collection system. That is what typical neo banking is. So in India, 26% of people already having a neo bank. Whereas in Brazil, 43% of people having a neo bank. And Uncle Sam is much behind. Uncle Sam, who talks about a lot of digital transformation of their country, they are much behind. But look at this. 37 crore people in India is already having a neo banking account. That's why they are using UPI. Whereas Brazil is having only 93 million. Despite having such a huge facility provided by Indian government and the UPI platform, why we are not in a position to use? Look at this. Uncle Sam is here at 7th number. So Indian banks and insurance system can do wonder, and that's why Nandan Nilekani and Augustine Carsten has talked about Finternet. The new internet of financial services is Finternet, where banks, insurance, mutual fund, stock exchange, NBFCs, every single participant in the financial services system will be under one net called Finternet. I'll stop here. I'll just I just show you what we did. This research we did with our with me and my colleague in National Institute of Bank Management, Pune. 3 years research generated a lot of work. Every single theme, we generated this theme for further research in India. Every single theme can be researched out. Every single theme can be further researched out to develop India further. Thank you very much indeed. And I look forward to same research in the insurance sector also. May I now request Indrakshi to take over, please? Thank you very much indeed. If you have a question, please put me into LinkedIn. Not a single question of yours will go a begging. I will answer everyone. And you can also ask in the open AI. Sorry, sorry. Thank you. हाँ जाने मिस्टर देवरा हाँ
Thank you so much. So now I would like to invite CMA Arti Ajit Patil, Madam. She is the Managing Director and CEO, Saraswat Cooperative Bank Limited. Madam has been serving as Managing Director and CEO of Saraswat Cooperative Bank Limited since 1st April 2022. She is a member
Madam,
of the Institute of Cost Accountants of India. She was heading the Treasury Department of the bank for 3 years as General Manager. She has also versatile experience of 3 years in corporate credit as head of SME branches as General Manager. She is an energetic leader, motivator, and wants to take her bank to new heights.